Hey guys, GlacierPath Trading here. Welcome to part 2 of my overall GameStop trading theory. Now, what we're going to do is we're just going to go through the theory again, and then we'll, fast forward to today, and I'll give you a short-term outlook of what I think to expect here in the next month or two, and then we'll go from there. So essentially, my theory is that this chart is completely fake and it's ran by a mathematical algorithm to create volatility cycles that create these specific sequence of events and to create a new markup after the end of a sequence. As GameStop, I believe, is in a reaccumulative process, which means that GameStop should be creating higher highs, higher lows, right? We can talk about GameStop's fundamentals and the books and everything and how much progress has been made, but I am specifically just focusing on the chart. But the idea is because of the ascension of GameStop, cleaning up debt, creating profit for the first time, all of these amazing benchmarks that it's done, we can expect that the volatility cycles will create new markups in price. But what I'm here to show you is that this particular stock goes through about 5 different sequence of events that you can see here before the markup cycle. And you can get into the psychological sort of consequences of these events and how it affects retail ownership and how it can create income strategies for large institutions. And a lot of the times the retail owner gets hurt or gets highly emotional, especially in the sequence number 5, the short ladder channel. And the frustration sort of builds up into the very end where it seems like the stock is just going to keep going down and down until you get to the final sequence, which ultimately results in a markup. So I just want to do a bar for bar replay real quick and just kind of explain the step-by-step process. So let's go ahead and do that real quick. All right, so we're doing this live here. We have our very first spring, step 1, okay? And once you hit your spring on GameStop, you're going to go to the squeeze top. And that's what's happening here. So we have our spring, and I'm probably going to fast forward it a little bit here. Okay, there we go. We get to our squeeze top, then we come to number 3, our squeeze bottom. The stock should not go lower than the squeeze bottom, and that price was about $9.50. You come up to sequence number 4, which is setting the ceiling or the resistance. The stock should not break that ceiling until you finish off number 5, the short ladder channel. Now this channel is going to basically go from supply and resistance over and over and over again until it gets down close to the last step, which is return to support and spring. And in this case, it's basically just above, and I think let's zoom in here. I think it was about 3% higher than the final support. We'll see where it's at when it finishes here. So all of these times it goes back up to, resistance. It gets shorted back down into, the supply area, the support area. And we just keep bouncing. So what's interesting in this short ladder channel, the point in which it finds its spring is right at the bottom of the first shelf before the bottom shelf, okay? And that price is going to be about $9.80, $9.90. It's about 3.5% above the final support candle of the original squeeze, okay? So let's remember that for the future. So now we've come down, we've returned to the support candle. We're now going to spring. Roaring Kitty comes back right on schedule. We set the squeeze top. We come back, we set the squeeze bottom, stage 3, stage 4, we set the resistance here. So the stock will never go over that price at $47, and it doesn't even come close, right? And frankly, it doesn't really even come close to the 1770 bottom here. And this is the daily chart only. The 1770 bottom, it doesn't come close to that yet, but we're creating a new short ladder channel where we drop into support and resistance multiple times, okay? Now we're coming up to February of 2026 where I realize this is what the stock is doing. This is the entire theory of my analysis here. And many people said we were going to go to $30+ here, and boom, we already start tanking, and we're headed down to the final stage where we are now, coming down to 1770, okay? And right here, we do the private debt to equity, and we're already hitting 1850 in the pre-market on Monday. And remember where this in 2024 stopped? It was right on the shelf before the final shelf. So the white line before the red line. Well, in this short ladder channel that I have, similar spot, which is $18. That's why I've been calling for $18, okay? So in my opinion, let's get out of this bar replay here. In my opinion, all you're looking for is some congestion, right? Some digestion of the movement at the bottom, whatever it is, and then you get a markup, okay? So one thing I do look at in this particular, and I'll show you guys this real quick, is the RSI. And every single squeeze on the spring bottom had some type of bullish divergence on the daily. So you can see right here, there is a bullish divergence where price is hitting a lower low, but the daily RSI is hitting a higher high. You can even go back to the original squeeze right here, and you can see this right here. There's a bullish divergence, and then you even have, yeah, so that's the bullish divergence right there. And then, so right now what we have, which is interesting, let me blow up this RSI, we are potentially, I mean, really, let's look at it. Let's move this here. Yeah, so really that is a bullish divergence already, right? So what I'm looking at here in the short term, and let me actually just pull up the MA real quick. Let me do a 5200. So I'm doing this live on the fly really fast. Let's do a 5200 here. Let's actually even do, in this case, let's do the 20. Okay, so if by chance this pops up, and let me actually do, there we go, that's probably better, the 4 hour. So if by chance we pop up like this, I said this on my Twitter, I am going to short 20 with both hands, because again, 1770 is your bottom target. I could see this doing this. And 1770, if you remember, the last cycle was about 3% higher than the bottom candle. If we do 1770 and 3% higher than that, you're looking at about 1820 to like 1830. So I could see a move like this happening, and then maybe you get your rounding bottom into the squeeze, into the markup, something like that, right? But I do think there is going to be, you know, a couple moves to the upside or sideways moves that kind of fake out bulls and get them to, you know, kind of bite a little bit early before you settle into the bottom. But guys, this is my theory, okay? This is it. This is what I've been waiting for. Now, I do notice that online a lot of people take into this theory. A lot of people have been posting these charts with the, you know, support lines at the squeeze bottoms, and that's okay. But I do want to put a word of caution in. You know, if we were to dump further beyond 1770 and go to this bottom shelf at like 16 or even $15, I'm still not sold that this is invalidated. And I'll tell you why. Because there is this price trend line from the original squeeze right here to where you had this big markup at $5. If you draw it all the way to this next shelf here at the 2024 spring, that's $10. So that's a $5 increment. And then if you move up another $5 into $15, it's possible you hit that. And then you kind of like, where's my thing here? You hit this shelf right here. And then you hit 15, 10, and 5 perfect mathematical support ascension line. And then, because remember, I said that I believe this chart is fake and that an algo is running this chart. So those are my two. $15 to $18 is it. If we break $15, then this overall theory is incorrect in terms of timing things, in terms of sequence. Now, that doesn't mean that if you go to like $10, it's still not a spring. It's still going to be a spring, but I have serious doubts of what the overall long-term chart looks like. And just to give you a little teaser here, when I say it's in a reaccumulation on the macro, what I expect, guys, is the next move either, let me rephrase this. I expect the next move to still be another volatility cycle, but it's going to be shorter. Just like this cycle here was shorter than the original 2021 to 2024. This is like, I think it's like a little over 2 years, and this was 3 years, and I think the next one is going to be even shorter before they purchase eBay or whatever it may be. But I do think they have their hearts set on eBay, and I think they're going to force the action no matter what. So one thing I want to point out is that these short ladder channels are getting less volatile and less sort of on a downward angle. So this one is pretty aggressive at a downward angle. This one is kind of a more rising up, a little bit more flat. I would think the next markup would be something along the lines of this, right? And that you notice suddenly the channels are getting flatter and harder to kind of short down and create these short algorithms. And then suddenly, once this is complete, you have this giant macro cup and handle, and then kaboom. And that's when I think the actual squeeze would occur, is when there's no coming back. GameStop has the business eBay within the ticker, and then potentially they acquire another company, and then it just snowballs after that. And there's no point in doing total return swaps and any type of aggressive contracts and swaps, shorting techniques by the big institutions. So I do think once you mark up from here, you still have one more flat section of waiting before they get eBay. Okay? That's just my opinion. Maybe it won't. Maybe we're just going to blow off from here. But I like the idea of a giant macro cup and handle here, and I think that's where we're headed. So I am a GameStop bull right now. I'm simply just looking for a digestion process of this bottom. $15 to $18. Patience is going to be the key. But if we mark up from here, I could be willing to say that the next markup cycle, the next volatility cycle, is just going to be pinpoint accurate. So I hope you enjoyed this, guys. In the Discord is the actual trades, the timing, the dates, the volatility dates as well, that we expect things to change. And then I also have all that stuff for AMC and other stocks as well. So it's only $25 a month. I would really appreciate it if you consider that. But if not, please just subscribe and share my YouTube channel. We've only got about a couple hundred subscribers, but granted, I don't really post that much on it, and I kind of plan to do that a little bit more. So take care, guys. Enjoy the rest of your weekend. You know, we're finally here. I think this overall sequence, this algorithmic sequence that I have showed you guys since February, I think it's correct. I just think it's what the stock is doing. I don't think there's really any point in doing technical analysis, any point of, you know, trying to do other types of technical analysis, fractals, harmonics, you know, VPA. VPA is good with this because it can kind of help you determine where that bottom's going to be. I'm not really bought into sort of like the time cycle theories, like 3 years, 2 years. The only thing I've noticed is that this particular cycle here is faster than this one, and so that's something to pay attention to. And I think it's just because they don't have the ability to create that volatility up and down for as long as they had last time, because the GameStop's growing, their balance sheet is better, and I just think this is a foregone conclusion here that it's just only going to continue to get better. And so here we go, guys, you know. So if you want to understand kind of what dates I'm looking at, join the Discord and we'll see you in there. Otherwise, I'll talk to you soon.